This is a video on a gap down situation, and I have mentioned it before, but I'll say it again, that there's in the gap up conditions, we find proximity patterns in shapes and in locations. And when we look at gaps down, the locations are still there, but the variety of supporting evidence is the key to identifying a gap down. And it's once you get the feel of how the indicator lines are working, and how and you see that, for example, Zip Zion, when it's lowest, and you're looking at a possible gap up, and even with Zip Zion going down at that point, but the fact that it's lowest, that's a pattern identification separate from the gap up, that's verifying or giving you supporting evidence with a completely new and different pattern telling you about the gap up. There's also many other ways to identify that, and this example has a few that are you possibly might not think of all the time. And so this will simply increase your ability to capture a variety of items that are or that fall within the supporting evidence category. In this video here, we are in SPEX, and this vertical green line day is June 29th, 2017. And this was just last week when this occurred. And today, right now, as you can see from the data window on the right, is July 5, 2017. And on the vertical line day, we obviously have the peak, and the next day we had a gap, and it went down over 20%. Obviously, it closed on this day at $3.92, so it's not it's a big dollar gap, but it also gives us the opportunity to pick up a lot of shares, because there's 39 million shares traded today in this stock. And so you could pick up whatever you wanted to, identifying that it looks like it's going to be a gap down. Now, how do we know that it's going to be a gap down? I'll start in the trend chart and give you an example of how we look at things, and it's all relative to a percentage. Now, for example, when I'll step this up a little bit, we have trend red at 1,058 on this day, closing on this day. Trend blue is at 245. So you are about, if it was 250, there's about 750 points. Or in other words, you look at the percentage of this line, because red is significantly higher than blue. And that's one of the key things that you can see, but it's a contributing factor to the situation. Just the pure diff separation, the difference between the two lines. Otherwise, there's not any support in what or there's not any verifiable support technically in the trend chart. In the power chart, we have one key line, and that's the power red. And as there's two factors in the power red. You may not be aware of it, but we have power red is the best position indicator that we have. In other words, when it's above zero, prices move up. When it's under zero, prices move down. Now, obviously, that's relative to the direction of the line. But as a general theme, if red is above zero and bouncing around for many days, the stock will tend to go up. The two conditions of the trend red are that we're in a low angle up right down here. This is the third day up and we're in a low angle up. And one of the key things is that power red is at 1.8, power pink is at 3.7. Don't let me confuse you. What I'm trying to say is that power red is really low. And when it's low, that's just and how can it be low when you got a huge monster gap up the day before? And it's simple. It's telling you just by the location that it's in, because red is a real fast moving line, red bottoms out at -6. And red will, depending on the value of the stock that you're in, the power red line will go up much higher than 6 up above. But usually it's in your high value stocks. Generally speaking, it's 6 on both ends. Now, because it's just like zip red, when you have a red peak, that's zip red over 50, zip yellow under 50. When zip red goes up and it cannot make it up past 30 or 40 points, it's being held down by market forces or pressures within the system. And so the fact that it did not go up real high means that there's many forces keeping it down, or at least one. Same is true here with the power red. Now we know power red in a low angle up is a next day down condition, and rightly so. And the fact that you had such a huge gap up to this day here, that would tell me that we were possibly in exhaustion. That does not always, that's only if you're just looking at the candles, you can say, yeah, that's possibly true, or that could be true, but it also could gap up again today or the next day after the green vertical line. And so until you can analyze the indicators and see that exhaustion may or may not be there, you're not exactly sure. But the power red, being that it's very low and it's in a low angle up condition, tells us that the next day will be down. We also have a power pink, which is our deep cycle indicator. There's 2 deep cycle indicators. Swing gray is the primary one. It's the best one for determining true cycles, because you can get it can go up really strong for many days and then take a pullback and then go up again. The swing gray is not going to move. It's going to continue up. But swing pink is what we refer to, or not swing pink, power pink is what we refer to as our short cycle deep cycle indicator, meaning that it captures cycles in shorter terms, and so in shorter lengths of time. And so in this case, power pink is highest. Again, we can't tell that it's not going to do a low angle up on power pink at this point, but we're pretty certain that it's not going to do that because of the power red conditions, being that power red is lower and in a low angle up. Swing Zion is highest in a low angle up, and if you understand the big three, that's trend red, power red, and swing Zion, you know that that when Zion is up, and in this case it's real strong up. We actually have about a 5-day high M pattern from peak to peak here, or maybe more, maybe 7 days or whatever it is. And this tells us that we're in the low angle of swing Zion, low angle up on a peak tells us that it's going to be next day down. And this is very important. I'm not sure if you've picked up with other videos. Swing Zion and swing pink are very important lines. They're paired together. Swing Zion is your price barometer. It's one of the 5 that are on the chart, and that's key. Very, very important. It's a high value. There are 2 indicator lines that are high valued in the system. There are, probably about 10 out of the 22 market force indicators that are more important than the others. But swing Zion is a price barometer along with zip pink and the 3 price lines, green, red, and blue. Those 5 lines move with the price. They tell you which way the price is going. And for fast determinations, this can be very critical, or very important, I should say. And sometimes when you're on a peak and you have a red top, or the price red is highest, and then it goes down, and then price red is lowest, you then have a divergent condition in the price. And that condition, depending on the other supporting evidence, is one of the key items of supporting evidence that will tell us about a gap up or a gap down from that point after it goes down. But typically, not always, but typically the price, when you have a gap up, the price red and green lines, actually all 3 of them, but the price lines are going up, and then you have a gap up. The price lines are going down, and then you have a gap down. Now that is not always true. Please don't misunderstand that. The other thing that we have here in the zip chart is that we have zip green at 100. We have zip Zion at 99.84. And when you get Zion that's really close but not at 100, that's usually a good indication that the next day is going to be down just by itself. Okay, that's not necessarily true, because like in this case here, the day before, zip Zion is at 98.96, and then it went up one more day to 99.8. So it had a 2-day top there and the line was almost equal. But it is or can be a motivating or a part of the supporting evidence. One of the big supporting evidences also is price green, and that is at 149.7. Again, if you've heard me talk about where the top is on the price green and red charts, you know that its top runs around 150. Now, I have seen many days in which it stayed above 150, but that's highly unusual. It typically will go, like today, on this vertical green line day, I suspect that the green line, when the price was far above where it closed at, when it was up there higher, this green line was above 150, but it never stayed above 150. And so one of the key supporting evidences of this thing is that you're at 149.7, and it's really not likely that it's going to go back up. And so there's a good chance that it's going to go down. It doesn't necessarily tell you that it's going to gap, but because you had a high gap up, you're likely to have a significant go down, if not a gap down go down. So those are some of the key things about this particular gap. I think it went down probably around 21%, which is fantastic. You could have bought the close. There were 39 million shares traded. So you could have, obviously, if you would have spotted it earlier, you would have grabbed it earlier, seeing the evidence that we have, because not much of this was changed. The other thing, too, I want to point out, I forgot, was over here in the zip chart, you had the red, blue, and yellow and gray all running together, but they were doing so, they went up, but they were doing so far below the zip 100, because your zip red was at 76, gray 77, yellow 76, and blue 74. So they were, right about 25 points under the 100 mark. And that can be relative to a little bit to the price value of the stock, but I don't think that's the case. Probably, I just think that there is an influence in the pressures that are telling us that things are going to go down. And what I suspect happened was that this thing peaked out. It had a high today of $4.75. It closed at $3.92. So it went down 20-some%, and I suspect those four lines were up a lot higher before at the peak, and then they just flattened out by the end of the day. So the upper tail could have caused part of that drop in those four lines. But that's the issues that you have with this particular gap down, and it just becomes easier and easier to identify these next day moves. And as you watch more and more videos, I know that you will become more familiar with how to interpret the indicator lines in relation to the price movement. So again, excellent example of a gap down, and encourage you to look at additional videos and become familiar with it. Become familiar with how the indicator lines work and their relationship in the different conditions that we find them in. Because market conditions vary, obviously, every day, every hour, and every minute. So things change, but we can, through the indicator lines, we can see that movement, because there are it may not be amazing. Once you understand that these are very sensitive indicators, you also can put the correlation together that a lot of them are leading indicators, and some will be a leading indicator at a particular point in time and not a leading indicator at another point in time. So, but like swing pink, that is almost always a leading indicator, and the same is true with zip red. Those two are the two fast lines, or the quickest lines on the entire system, but they work a little differently. Zip red will go up 40, 50, 60, 90 points in one day, and the price won't hardly move. But the next day, when zip red jumps 80 or 90 points, zip red is going to go down typically, especially if it ends up above, say 90. When it goes from like 4 points to 92 points, next day it will go down, but the price will go up, and it's a leading indicator telling us about that price movement. That's a general statement, but usually the supporting evidence will adhere to what I just said. That is not true with zip pink. Zip pink doesn't move. I said that wrong. Swing pink. Swing pink does not have the range in the indicator line length that zip red has. but it has quickness. And that quickness is one thing that we value. And so once you become familiar with the different indicators and what they represent, that will become you'll begin to see the relationship between the indicators and between the price difference. It's just like Zip Green and Zip Pink. Zip Green tracks the trades or the buyers in and out of the market or in and out of the stock, and Zip Pink is your price barometer. And so as the price increases, Zip Green can be at 100 it can be a pinpoint top at 100 and go down the next day, or it can run 6, 7, 8 days at 100, and Zip Pink will continually go up. And that is a pink-green top pattern. And we know what the signals are, and there's a few different examples. One of the signals is if Zip Zion comes up to 100, it will oftentimes go down the next day. Not always true, but there's other supporting evidence that will tell you what's happening there. And another one is when Zip Pink is not highest and Zip Green is moving along at 100 for a couple of days, and then all of a sudden Zip Pink pops out and becomes highest right next to green. That is oftentimes the next day down. And that's the condition of the pink-green top. Zip Pink must be next to Zip Green before it goes down. That's a rule. And that happens in probably 92 to 95% of the time. And that's it's obviously it doesn't happen all the time. But we deal in high probabilities. Everything we buy is a high probability. And that's based on our pattern formula, on our formula power, and that is when we find a pattern and we verify the conditions of the pattern, and then we wait for a signal and we buy it at that point. And so we end up with a real high probability because we've eliminated the moves that don't have good conditions, that won't generate strong candles, and we've eliminated them before we make the decision to purchase. So everything in the DTVB system is based on strength. We saw way back from the beginning, we saw that sometimes cycle changes were done, had a lot of strength in them. Gaps are obviously a visible sign to that, but there are many other ways to see uptrends, or downtrends. 2, 3, 5 days down, or even it's not, you don't necessarily see a 10 or 12 day down movement, but you can definitely read your situation daily and make a determination that to stay in the stock. So that's the issues on this particular gap down. I hope you're in a situation where you're looking at a lot of videos. Don't get started too early. I'll be the first one to tell you that you can watch these videos 24 hours a day, and you can watch them for months if you want before you get started in this system, because the single most important thing that you're using in your trading is the system that you use to find the trades that you make.